I'm here to clear a lot of noise. So we're hearing a lot of noise in the real estate market because something happened today that hasn't happened in 22 years, and that's that interest rates went up by a half point in a day. And I'm not talking about mortgage rates. I'm talking about the Federal Reserve increased interest rates by about a half a point today, by a half a point, not about a half a point. And there's a lot of noise around that. In fact, there's a lot of fear and there's a lot of trepidation in the real estate market. And I think it's unnecessary. The front page of our local newspaper came out today saying that in March, median house prices were down 3.5%. Well, that's not the case in San Juan County, or at least according to the MLS numbers that I'm seeing. The MLS is our multiple listing service. So if you sell a house or buy a house with a real estate agent in San Juan County, we all report our numbers to the multiple listing service so that we have a good gauge of where the market is going. The median price and the average price were both up over 11% from last year this time. So what does it mean to you when the Federal Reserve jumps interest rates up by a half a point in a day? Well, if you're a buyer, it means that you have a little bit less buying power than you did yesterday. That's simply all it means. And we've been talking about this consistently since January, is that the Federal Reserve, in order to slow the rate of growth of house prices nationwide, they've expressed that they're going back to pre-pandemic financial policy. So they had dropped the prime rate down to zero, and now they're increasing it because the economy is doing relatively well. And the housing market's doing incredibly well nationwide. There's a lot of demand. There are a lot of buyers. There's a lot of noise, and I just want to cut through the noise. Historically speaking, even with an interest rate hike of 2% over the course of 12 months, pricing still grew by 8%. So the sky is not falling. This is not going to pop the bubble. We've talked a little bit about construction rates in the past. The fact of the matter is that in the 70s, 80s, 90s, early 2000s, we were building houses nationwide at the rate of 10 million houses per decade. Since 2008, we've built about 6 million houses in the United States. We've had population growth, not just by reproduction, but also by immigration. So we don't have enough houses for the people that we have. And what does that mean for you? Well, half a point up means your house will probably be worth more in 3 or 4 months than it is today. It also means that we're probably going to, I think the Federal Reserve really is going to accomplish what they're trying to do by slowing the rate of growth. You're probably not going to see these crazy situations where you get 3, 4, 5 offers on a property anymore. So for a buyer, you may have less competition in the marketplace, but your total cost of ownership will probably go up. This is not the last time that the Federal Reserve intends to raise interest rates this year. In summary, what do rising interest rates mean for you? Really, there's a few ways that historically it affects the market. That's price appreciation will slow, meaning we're not going to see prices go down likely. We're going to see the rate at which prices are increasing slow down a little bit. Sorry, I bumped my desk. The other thing is that houses are probably going to take a little bit longer to sell. We see a lot of 0 days on market in the MLS. We see a lot of 1 day on markets. For us, we typically leave a house on the market for 2 to 3 days so that we can make it available to all buyers on the market and kind of make them compete for it. So you may not be competing against as many buyers in the coming months, but your payments are probably going to be a little higher. The other thing is that more expensive money means that investors are less likely to be holding homes as much as they will. So inventory might climb a little bit as well. So this complicated, frenzied market may stabilize a little bit with these interest rates coming up, but it's certainly not going to pop the bubble. So overall, if interest rates don't mean a whole lot to you in this specific time, overall, my goal with this video is simply to calm the pressure. I want to cut through the noise and bring clarity to a situation where a lot of people are bringing noise and frustration, fear, trepidation. If you've been in your house for 5 years and you plan on being there for another 30 years, these interest rates don't mean anything to you. So this isn't going to crash the market. I wouldn't panic sell anything. If you want to sell your house, sell your house. We'll get you into another one. You've probably got a ton of equity in it if you bought it a few years ago. So I think there's a lot of positivity in this market, and I would hate for a negative outlook to scare people away. Thanks for watching. I'm Brian Crawford. If you have any questions, post them in the comments section. I'd be more than happy to answer those questions. If I don't know the answer to those questions, I'll look it up. It's my job to keep you informed.